You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. That rockin' bin of tunage means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of unusual activity. Swirl it all together, and you have the tasty frappuccino. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which you are listening to this fine program, and indeed, hopefully, many others these days as well. You guys know how to find us, of course, after the fact on your device of choice right now, noon Central, 1 p.m. Eastern, every Monday and Thursday for this fine program. Others throughout the week. We have the live schedule up there on the website as well if you want to see what other shows we do live. If you want to listen in, stream in, ask questions, send in snide remarks to the Rock Lobster, all that good stuff. You could do it all there. And, of course, however you listen, make sure you hit us up with those questions after the fact as well. We love those. Questions at theoptionsinsider.com. All the other platforms, you guys know how to get at us. Carrier Pigeon also works, even though it takes a little longer. And joining me on the program, since I gave him umbrage already, we might as well get him on first. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from down east there in Maine, by way of the land of the pit. Mr. Rock Lobster, welcome back to the program, sir.
It is lovely to be here on your program, and I'm actually today. It's a sunny day, so I'm letting the umbrage fly. I'm going to let it just wash over me. And actually, I do have a client request from Steve. He's like, "You need to bring Tubby back on because he's funnier than you." I think that was the quote. He's funnier than you. So,
well, there we go. I'll put in inquiries at the pool house, and we'll see what we can have happen here on the old program. But yeah, I think he's busy over there in Matrix land these days. Maybe we'll have to have a return appearance of the Tub Master. And then getting a little closer to home, we go out to scenic, to quiet, to lovely St. Charles. We got him to put down his delicious gyro and lemonade just to do the show with us. He is Uncle Mike TOSAW from St. Charles Wealth Advisor. Uncle Mike, how goes things in St. Charles, and how is that delicious gyro?
St. Charles, the land of no snide remarks. We don't have such things out here because there's no need for them.
You know, I like having Fidelity on, and that's cool and all, but one day, I will get a sponsorship dollar from Skippy Zeros and Lemonade. You mark my words, sir. How many free plugs have I given them now?
I don't know. You kind of ticked the people off a couple years back when, I forget what you said, something about like our sanitary system doesn't work, and you said the whole town stunk. I mean, I had to do a lot of damage control, and the people at Skippy's were not very happy with you with that remark.
Well, you know, that was more of a general St. Charles thing. I forget exactly what it was that I said. No, I think it was something along the lines of rickets. That's what it was. Yes, you led the nation in rickets, something along those lines. But I digress. It wasn't about Skippy Zeros and Lemonade specifically. It's more about the general geographic region, which I think they clearly understand in their very evolved state. And last but not least, over there, he's back from vacation. He's ready to roll. He is the last emperor, Mr. KONSTANTIN VRANDOPULO, holding down the Fidelity hot seat today. Mr. KONSTANTIN, welcome back to the program, sir.
Thank you so much. It's a pleasure to be back. Had just a couple of days off here, Friday, Monday, but back in the hot seat. Ready to roll for today, for sure. And
I think you understand what I mean there, right? You would do that as well. If you had a choice between Fidelity and Skippy Zeros and Lemonade in St. Charles, I think you know what you would choose.
Gotta do the food, for sure. I agree.
It's tasty and delicious. Are you bringing me Zeros and Lemonade? I don't think so, sir. All right. With the team assembled, let's dive, before I make myself hungry for lunch here, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. You know, we talked about it this week at the beginning of the week on our Monday show and how it was a weird day. You know, the markets were still somewhat reeling from this unprecedented attack on the global crude infrastructure there in Saudi Arabia. We saw 5% approximately of the world's output taken offline, the largest amount of crude, percentage-wise at least, offline since back in, the Iranian Revolution, all sorts of just crazy, unprecedented numbers. And yet, as we said on the show on Monday, things were kind of selling off, but not really, nowhere near to the degree you might think given the unprecedented nature of the news. And here we are a few sessions later on Thursday now, and, we got the Fed behind us as well, cutting a quarter point. That was pretty much what everybody expected. And so now here we are, a few sessions and a bit of a rally here, a little sell-off yesterday, back to rally mode again today. If you're just coming back, you were on vacation for the last month, you say you were out in Belize, not paying attention to such trifling things as the markets. If you pull up the quotes today, you see a rally, you can see the S&P still pretty far up there over the 3,000 level. You see VIX at a 1335. You'd say, wow, all is right with the world. There is naught to be concerned about here. Mr. Rock Lobster, I know you kind of echoed that sentiment on Monday. It seemed like the markets were perhaps underpricing what was going on from a global macroeconomic and geopolitical perspective. Here we are a few days later, and they're pricing even less. So have you changed your outlook on this, sir, or you think there's still maybe a little more concern to be priced in here?
Honestly, I had no choice but to change my outlook because I even wrote a blog on Monday, my blog of disbelief. That should have been a 9-handle move in VIX.
My blog, that should be entitled, My Blog of Disbelief, Andrew. That's a great title. Right there.
When we were trading in mid-90s, early 90s, whatever, 2000, Saudi Arabia bombed. I don't even know where we would open, And so the reality is either the market has unbelievable confidence in the current administration to walk this tightrope, which I guess, right? Or the fact that the U.S. produces more crude than Saudi Arabia, or close to it anyway, is a huge dampener on the whole thing. So I would assume at some point, they figure out who did it and they slap their hand. But just the world is a different place. That's all I can say. You've had repo market craziness the last 3 days, and all of these things should be produced, and it's just not. So it might later, but it's not right now. Where it is producing some vol, I would say, is even as the VIX cash drifts down, and this is something for listeners to follow, the future premium in VIX is at a year high for this part in the cycle. So, you can see a lot of things from people. Like, what matters with VIX and the VIX futures is where the future is relative to cash at a point in the cycle. So right now, we're a day past expiration. VIX cash should be around $2. It's actually quite a bit higher than that. So the market is pricing more future premium than normal. To me, that usually says they're a little nervous about the future. It has one of two ways to go. Nothing happens and the future premium comes out and VXX gets crushed and VIX puts become worth a lot of money and stuff like that. Or people are actually right. And, we have a vol event here within a couple of weeks. So that's what I'm watching. But the future premium is still pretty juicy. And, it can't stay there forever. It's like anything else that rots. And I think that's the interesting part. So I think there's that little bit of future premium is still, even while the market rallies, they're not giving it up. Now, they do give it up. We start seeing like sub $2 next week or less. $1.75, $1.50. I would say we're starting to accept what we have as far as, all of these potential vol events are going to kind of just fritter away. Or I should just say Twitter themselves away.
Who are clearly up in arms about all this are the crickets in Maine, sir. They are out yet again in force. so maybe.
By the way, my windows are closed.
You must have crickets rampaging through your office, sir.
Yes, I do.
Are you hanging out with Jiminy Cricket over there? Either way, the crickets clearly taking umbrage at how the markets are pricing in this volatility due to the Saudis. So crickets not feeling what the market is selling. Let's go out to the land of the last emperor. Sir, you were on vacation earlier, so didn't get a chance to pick your brain about all this madness that's afoot. Or I guess if you looked at the market today, calm and tranquility in the markets today. What's your take on how the market is reacting to all this this madness in the Persian Gulf region, and also how are the Fidelity masses? How are they responding to all this? What are they trading today?
Yeah, guys, I would say that, obviously the way the news broke, I was looking at the oil futures overnight. I mean, that was a massive move up, and the energy sector overall that's been relatively underperforming had a pretty good day, but it faded quickly. And I guess maybe part of it is due to the commentary of maybe sort of military action from the U.S. or the fact that the Saudis are coming back and saying that they are confident that they will be able to bring the production back up to the previous levels relatively quickly. I'm not really sure, Andrew. I would agree with you, though. Going back to certain sort of events of disruption of this size used to have much larger effects and remnants through the equity markets. What I can tell you is that the last few days I've been watching what Fidelity clients were trading, and there were a lot of energy names on the list on Monday and Tuesday, but today they're back to pretty much the regulars. The number one rank again is ROKU here in the amount of orders. This one continues to be at the top of the list. It seems like at least 3 or 4 days out of the week. This is a stock, again, that's been a tremendous performer relative to, let's say, the NASDAQ or the S&P. I mean, it was up, I think, on the highs of the year, close to 470% up. So it's given up some steam, over the last few weeks. And primarily, it seems like what's causing it, or what the catalyst for the sell-off is actually news-driven. The first day that it sold off was on the Apple event, where Apple announced that they're going to be charging $4.99 for the streaming service. So that was the initial drop, right, from about $171 to $150 or so. Now the stock is at $129.81. so down or flat on the day, but was down a lot yesterday. And the fact that it was down yesterday was due to the fact that Comcast actually announced that they're going to have their own streaming service or its version. So, there's some profit taken in here. I would say that the stock, was in this relatively extreme overbought condition from the technical perspective. Maybe, a little bit ahead of its skis, way above all of the moving averages, being up as much as it was. And now it's just coming in a little bit. So, depending, I guess, on when you got involved, if you were getting involved in this name at the top, you should have been probably having and making sure that you did have a very good risk management technique. The stock right now is sitting right on top of the 50-day moving average. And again, it's down 40 points off the high, and it's just touching the 50 MA. So that tells you how stretched it was. So from the piercing of the two standard deviation Bollinger Band on the top side, right through to the downside, piercing the two standard deviation Bollinger Band on the downside now in just a matter of about 10 days. So a lot of volatility in this name. The options markets are trading, way higher than normal ADV. Right now, 195,000 contracts. 90-day ADV is 113, 114,000. Again, what's curious to me is that, Fidelity clients continue to trade it. They seem to be pretty much even in terms of their views, right? 50% buys, 50% sells, and that has been the case over the past few times that I've actually mentioned the name. So there's plenty of profit takers or bears as well as bulls, and it's reflected in the stock. Now, guys, what I find interesting is that looking at the implied volatility, right, the way the options markets are trading in here, what I do see is that the implied volatility is pretty much at, or very close to 52-week lows. Right now, implied vol 30 days out is priced at around 59%, and it's actually coming down dramatically as the stock has fallen off a cliff. So here's an example of the type of stock where implied volatility exploded into the early summer months from 50 to 100%. And since then, right, as the stock stabilized at the top, has decreased all the way down to, let's call it a round number of 60%. So, supply and demand equations are working in the marketplace, and this idea of, the stocks that go down always have increased implied volatility versus stocks that go up always have decreased implied volatility. This is a pure example, right, that is not the case. It's not an absolute rule of thumb. It just depends on what market participants are doing and how they're behaving based on what they see in price action. So enough on Roku there. Microsoft is the second one. I find Microsoft to be interesting today because it did actually touch the all-time high level intraday. So right now trading at 140.53. It's up 1.5% on the day. On relatively decent volume, I would say that the options markets are trading, with the news. The news were the fact that they announced in the extended hours yesterday they're buying back $40 billion worth of stock. I found that news line to be very interesting because if you think about that sheer number, right, $40 billion, it's much larger than a lot of technology companies in their whole market cap. So, instead of deciding to innovate, right, invest into new projects or outright buy somebody, they're just deciding to buy their own stock back while the stock is basically touching the previous all-time high. So I find that to be quite interesting. 427,000 contracts traded today, 90-day ADV, 207,000. So there's definitely a lot of activity. Looks like call to put ratio today is around 2 to 1. So a lot of activity out there in October that we're seeing. Maybe some of it is just, this continuation of, traders taking off their September positions and starting to position for the next month. But I find it to be interesting. This sort of an announcement, with market testing previous all-time highs or very close to them. Microsoft is actually behaving as one of the best technology stocks right now, trading almost at that all-time high. And it had a pretty relatively benign summer, right? Anywhere between the 130 and 140, so in the $10 range, kind of basing here at the top without hardly any pullbacks, and right now is testing a previous high. The next one that Fidelity customers are trading in bulk, number 3, is Apple, down 61 basis points at 221.39. This one, obviously, also probably trading on the news factor. I know that there was some news lines from the pre-orders out in China saying that they basically doubled from the last time they rolled out the phone. So the stock had a pretty decent pop yesterday. It's giving some of those gains up today, but it was actually one of the better behaving stocks through the sell-off yesterday on the back of those news, and today is being a little bit of a laggard. Not a whole lot of options activity there, at least not, dramatically different from its 90-day ADV, close to 300,000 contracts traded on average for 90 days of around 470,000. But again, a stock that is, testing previous highs and has hung in there really well through the August sell-off. The final one that doesn't usually make the list is the letter X, U.S. Steel Corporation. So down 11% today on weak guidance, on the mention of the fact that steel prices continue to be lower than the firm was expecting. Guys, I don't know if you trade, iron ore or steel futures, but I don't normally look at that stuff, but I looked at it today, and it seems like, the steel contracts have a ton of volatility, which I didn't really expect. And regardless of how you slice it, I guess if you overlay the iron ore U.S. steel prices over the chart of U.S. steel or the letter X, it still doesn't really correlate. I mean, this stock has been in a huge, downturn, right? Since basically 2018, it made the high at around the $46 area, and it's been in the downtrend ever since. It's way underneath the 200-day moving average, continues to make lower lows and lower highs along the way. Can't get any momentum, right? If it does, pretty quickly profit takers come in and smack it back down. So this is another example of, okay, well, our outlook on European growth is weaker, guiding down for Q3, caught a bunch of downgrades, stock down 11%, trading at $11 a share. Options markets in U.S. steel today are fairly active. We have 136,000 contracts traded on an ADV of 51,000, so definitely way more than twice the average today. People are probably trying to position themselves, maybe looking at these previous lows, right, that were made at the end of August as the next relative level of support. If that doesn't hold, you got to go out to a 10-year chart to find the next level, which was hit in January of 2016 here. So, yeah, nonetheless, stock has had a lot of volatility along the way. It looks like, once the trends change, it does get to pick up a little bit of momentum in the directional sense, but right now the momentum and trend is to the downside. So watch out below.
It's funny you should mention iron ore, because that pops up on our scans every week on our TWIFO program, which is coming up in about exactly an hour with our old buddy Mr. Russell Rose joining us on that one this week. And yeah, it's always one of our top market movers. This week is to the downside yet again, off about 6.5%. We don't get a chance to really parse it too much on that show, though. People have written in before asking us to talk about iron ore. We've done some hits on it, but it's not really an options story. There's really no options narrative there. It's no volume, so you can't talk skew, really volatility, any of those things that you like to sink your teeth into when talking futures options. You can talk of futures, but it's not a future show at the end of the day. So we see it there dominating the downside usually every week, and it is again this week outclassing pretty much everything else by several percentage points. And yet it's not one we can really sink our teeth into, but a fascinating one nonetheless. Speaking of fascinating, Uncle Mike, are you fascinated, I should say, with metals and everything else out there? What's catching your eye out there in the land of St. Charles today, sir?
Well, I think that the market's kind of digesting what the Fed's doing at this stage, and sometimes markets react a little bit later to things. And yesterday was actually really interesting to watch, seeing how the markets were reacting after the Fed in terms of them going down a bunch and then coming back to pretty much the unchanged level towards the end of the day. And it feels to me like a lot of what we're getting is that it didn't digest it right away. I mean, there's some Fed announcements to where the market just moves a lot one way or another right away. We're not getting that with this announcement. So that is pretty interesting to see. The other one that actually kind of caught my eye a little bit over the course of this week was Chevron. Chevron's not something I'm really actively trading that much. It is a hold for some of my clients, but it was interesting to see the movement of XLE related to Chevron. And that XLE, the ETF that trades energy stocks, it went up and down rather quickly, and that we gap up, and then we pretty much come close to closing the gap on it once the market settled down after what happened in Iran. But Chevron really didn't have a lot of movement per se in comparison to the market itself. So that's another thing with which I'm watching and going to continue to watch over the course of these next few days to see where that ends up. With a low VIX right now, or a lower VIX right now, we're closer to all-time highs. I thought I was going to have a chance to say my trademark saying today on the show, but I think we did technically make an all-time high for a minute earlier, but still not enough for me to justify saying my trademark saying. But with a low VIX right now, this can either be a very fun market or a very frustrating market, meaning that if you're bullish and you think the market's going to go up further, well, then it's going to be a very fun market if you're right, like with any market, because you can create a lot of leverage and make a lot of money by buying premium if that's what you believe is going to happen. However, if you're a premium seller and you think the markets are going to go sideways or maybe even come down a little bit, that can be a very frustrating market. So the thing that I would recommend doing is be very nimble in that don't get married to thinking you always have to do the same thing. And if you're not a very nimble trader, stay out for a while. There's nothing wrong with being in cash.
Cash is a position at the end of the day. And let's look at here really quickly. It seems like the worm may be turning a little bit out there in the markets while we're talking here at the start of the show. I mean, things were looking pretty joyous up across the board. I realized I didn't even do my breakdown here at the top of the show. I've been busy running around doing other things here, but everything was effectively down from our last show. But as you would expect, of course, from a vol perspective, indices, of course, up, but not quite up as much as they were. You know, NASDAQ kind of almost unched now to slightly the upside. S&P ticking down again, only up 0.1%. Dow almost unched as well. And VIX cash was at about 13.35, so it was down about 1.5 points from our last show. Now it's about 13.85 or so it's down about a point. So getting a little bit of life back in. VVIX 96, almost 97, down about 4 handles from our last show, but still threatening that triple-digit level. Still threatening elevation. VXX a little bit shy of 22, about 21.8. It puts it down over 1.5 points from our last show. Decent volume on the tape today too. We're seeing VIX a little north of 250,000. That's closing in about half of its ADV. SPY, same deal, about 1.7 million. We're seeing about 3 million out there as the ADV. SPX kind of lighting it up today, though. About 1 million contracts on the tape. ADV a little bit north of a million, 1.3 million. So some size going up out there in the S today. The Q's 450, ADV about nearly 600,000. So decent paper out in NASDAQ land. And the Russell, aka IWM, doing about 367. That's about 100K off its ADV. In terms of top 10, Let's run through these quickly so we can get into the odd block. Number 10, AMD. AMD falling off a cliff here. Now nowhere near in the top 3 these days. Only a paltry 125,000. Maybe that's also a reflection. Some of the names actually doing some paper today. 125,000 for number 10. Number 9, our old friend, Mr. Konstantin. Just talking about it out there. It's our old friend, U.S. Steel. Haven't seen them on the top 10 in a while. $1.36 on the tape there. Number 8, Tesla. $1.47. Number 7, Netflix. $1.55. Number 6, Facebook. $1.66. You seeing some familiar names in there. Number 5, AT&T. Getting in the top 10 these days. $1.83 on the tape. Number 4, Baba. $1.85. Number 3, the aforementioned Roku. $1.95. Then we get up into the big boy numbers. Apple, 297,000 contracts. And as of a few minutes ago, Microsoft at the top spot, 425,000 contracts. All this talk, last Emperor just alluded to it, the buying back at the top. Is that a good use of capital? I know buybacks are contentious things these days for a variety of reasons, but there also are things that, undeniably impact the underlying going forward. And it's also a bit of a statement of confidence from the firm as well. Hey, we like these levels. We want to buy more. So as a result, we usually see the underlying moving and see some other paper as a result. And that's clearly the case out here in Microsoft land. Meanwhile, it's time for us to keep on rolling into the dark lands. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
Everybody, welcome to the odd block. Let's get right to it, Mr. Rock Lobster. We've been gassing on about all sorts of fun stuff, but there's some oddities to be parsed. First off, we're going to go back a little bit, not too far. Going to go back about exactly 2 weeks to the show 2 weeks ago, where we were talking about ATUS USA. This is ticker symbol ATUS, ATUS. At the time, back on the September 5th show, we profiled what seemed to be some, at the time at least, a near upside call love, but for decent size. It was a block that caught our eye of about 5,000 of the SEP 30s, going up for 47 cents. That was a couple of cents off the offer, but it was the volume overall that really got our eye. Over 31,000 total trading on the day. So that was a lot of paper, I think, by any definition, by any stretch of the imagination. That was a lot of paper going up out there in good old ATUS USA. The stock closed on the 5th, 29.5. So these were very near out of the money. Didn't need much of a move to have these pay off. And what happened the very next session, pretty much, it sold off. Got down to about 29. The next day, it was trading 28.5. So within a couple of sessions, it was a full $1 and change lower than where it was, where these calls went up. So it wasn't looking too good in the first blush. Remember, these are SEP, so these are going out fairly soon. He's got about a day left to play here. And he's at that line now, at the line of scrimmage. As we're talking right now, ATUS ticking right around the 30 handle, 29.95. So it's that old game of, will the gamma kick in? Can he get enough of a move to make these pay off? Right now, he needs 47 cents to the upside to make this happen. The stock's been slowly retracing ever since that sell-off. And as it is right now, it's been up about a handle and a half since that sell-off. But it's kind of back to pretty much close to unched, a little bit up from where it was when this trade went up. But of course, in the weeklies, decay is not your friend, particularly when you're buying. And that's been this guy's enemy because these things have pretty much eroded to not much left. Worth noting, there are a bunch still open. Also, worth noting, more traded the next day. So the 5th, about 32,000 almost trading. And then on the 6th, about 9,000 more going up. Also worth noting, the OI didn't jump up to 31,000. So it seems like maybe some back and forth going up. Only 21,000 for the OI. So that was interesting. Maybe someone closing out some of that towards the end of the day. But either way, OI stayed at about 22,000 until not too long ago. It looks like about the 17th. Just a couple of days ago, someone came in and closed out about somewhere around a few thousand, 2,000 to 3,000, and then looks like maybe a day before another 1,000 or so. Because OI right now is at about 16K left. So there's still 16,000 of these bad boys open. Mr. Rock Lobster, what do you think? This guy's obviously sitting there glued to his screens. You know what it was like back near expiration, you know? Short gamma is one thing. Long gamma, you're just hoping, right? So what do you think? You think this guy's got a chance here, sir?
I mean, really, do you think he does? I'm looking at this like...
I'm being charitable. I don't think the Crickets think he has a chance.
I think the Crickets are like, you know, I think unfortunately the Crickets are singing their song for him. I don't know if I don't think they're going to make it to the finish line, especially with the market kind of losing a little bit of. We had kind of a little bit of a turnaround all of a sudden.
Yeah, we spooked everybody. We were talking about the markets underpricing this risk, and bam, they start pricing it in.
Yeah, I mean, this has PIN written all over it. So I mean, even though SPX isn't doing anything, but this, I guess he's waiting for tomorrow. That's all I can say. He or she are waiting for tomorrow and hoping something happens.
Yeah, he's just rolling them dice now at this point. You know, it's a bit of an opposite thing for you used to see the guys, obviously, who were short a lot of premium expiration day on the floor, and they were sweating buckets and popping Tums, and they were looking at the ticker, and they were praying it wouldn't tick because every tick cost them money. This guy is the opposite. He's probably still popping the Tums and maybe sweating, but he's hoping for a lot of ticks. So you can still have the pain, listeners, of expiration with long premium as well. It just unfolds a little bit differently. Usually it's a death by 1,000 cuts. This guy got a lot of it right away when the stock sold off, and he's kind of been just hoping and praying ever since. We'll keep an eye on this one tomorrow, see how it goes out, but not looking good for our friend here. Let's keep an eye here on our next name as well. Actually, this is the newcomer. This is from today. This is Unified Natural Foods, ticker symbol UNFI, UNFI. Trading today, $12.66. Not a good day for them. Off about 75 cents, or about 5.5%. This is the distributor of natural and organic foods. And let's see, this name, well, this has not been a good year. 2019 has not been kind to UNFI. A year ago, they were trading $33.30. So almost 3x where they are right now. And then it's pretty much, this chart is nothing but downside pretty much. Sold off to 9 and change actually on Christmas Eve last year. Then it kind of looks like it rebounded a little bit. And it kind of hovered in around that, you know, let's say around that, it's like that 12 to 15 range for the better part of the year. Actually got back up to 15, and then it kind of slowly sold off for the rest of the year until recently got down to its 52-week low of about 675. Then it has jumped from there. It has pretty much doubled. A lot of that coming in the last couple of weeks. So the last couple of weeks have been good, I guess, for UNFI. The year as a whole, not so much. Let's see what the options market, our Eye of Sauron, has found for us. It's a 5,000. This is an interesting one, actually, because our first glance, the first Eye of Sauron pass, pulled up this 5,000 lot of the UNFI Feb 10 puts going up for 80 cents. This is right off the offer, opening over there on Gemini. And so we thought, okay, someone picking up a 5,000 lot of puts, interesting, Feb 10s. That's, you know, about a little bit shy out of the money, cheap stock, obviously wanting to hedge probably. And there are earnings on the 1st, but obviously through February is going to be a couple announcements between, at least one between now and then. And then we started digging a little deeper, as we are wont to do, and we noticed actually there was more paper going up today. In particular, 7,500 of the Feb 5 puts for trace cents. So this has the whiff of a little bit of perhaps a roll to it. Those Feb 5 puts, we dug a little deeper. See, we like you guys. We do our digging, so you don't have to. Those actually were opened on the 15th of August when the stock was very close to its nadir. That was 692. So this guy came in and had the unfortunate timing. I don't have the price for where, actually they were around 62 cents when that trade went up. So he paid probably around 60 cents for those bad boys. 7,500 times. This guy had the unfortunate timing of picking up 7,500 of the Feb 5 puts for around 60 cents. Pretty much at the 52-week low, right around it. The stock turned around. I'm sure he wasn't sad at the turnaround in the stock because this is undoubtedly an underlying holder. So he's making it up on the stock. He's happy there. But still, options-wise, it was a bit of poor timing. Maybe that was the trigger. Maybe that's the thing. You know, you go out and spend money on your hedge. That's inevitably when the stock turns around. So maybe that's the sacrifice this guy had to make to get the stock to move his way. What do you think, Mr. Rock Lobster? Is he sacrificing these puts on the altar of his stock, sir?
It would seem so, but why do you get rid of them for 3 cents? I'm looking at what's going on. Is he dumping them for 3 cents and then paying 80? It kind of looks like the pricing is, right?
That seems to be what he's doing, yes.
So why close for 3 cents? Right? Like, you've got till February. Whoever his broker is needs to be taken out because you're essentially closing the position for commission. Don't you feel like, somebody should at least be watching this show?
Yeah, if this stock has an aggressive turnaround to the downside, this guy could have been sitting on some cash.
Why the hell do you close something for a nickel with how many days? 155 days. I mean, granted, I'm going to say they're way, way out of the money, but the stock was like $8. I mean, it's up $4 in a month or something. Like, this move is insanely huge. So, I don't know what the heck is going on this.
Yeah, this guy maybe not getting the best advice here. His timing certainly is dubious on both of these trades, and yeah, you could certainly question the second leg of this one today as well, probably.
Right. I mean, okay, so he's buying the puts, into this thing. I would agree with you on the, he's probably protected some stock, but considering the stock is up $6 in 3 weeks or something. I don't even know if it's a takeover or what, but I wouldn't be in a rush to go sell those puts. But I think that's that gets the booby price a little bit. That's
very rare. The rare, and so not so much buying the puts right at the nadir 52-week low. The booby prize is then selling them out for 3 cents and rolling up. I like the very rare Andrew booby prize out here. You don't see those too often.
Guys, at the end of the day, it is $22,500, right?
I guess so.
Looking at it.
You're right.
It's a decent car. At the end of the day, you have some transportation for that. Maybe a nice trip around the world.
Well, and the worst part is, and then the liquidity providers bid him a nickel in their face.
Yeah,
so the guy just marks 3 cents, and they bid a nickel.
Yeah, that's kind of a slap in the face to that guy. That is.
So,
your broker's got to at least hit the bid there. You got to at least make a 5-cent bid happen.
I'm confident the Fidelity desk would have said, "Are you sure you want to sell those for 3 cents?"
Last emperor would have at least found a nickel somewhere, I think, to get that done.
Exactly. They're like, well, it's we would have got you.
He would have upgraded you from like a Toyota to a Lexus with that nickel bid there. He would have got you something for that. Oh yeah. So this is an interesting one. Speaking of interesting, I know your favorite trades, Mr. Rock Lobster. You love those line in the sands. So let's check out one more of these bad boys you talked about back on August 12th. See how it fared. It was a line in the sand in Auto Home Inc., ticker symbol ATHM. Trading today about $94, off about $0.50. But back on, when did we look? The 12th of August. Let's see, this bad boy was trading 77.5. That's when the trade was opened. And this seems like a fortuitous bit of line in the sandage, sir, to coin a phrase, because the stock pretty much never looked back from that level. The second this guy blasted out those puts, they never looked back. The trade in question was the SEP 65s, paper crushing the bid 5,144 times for 80 cents. And it's worth noting there are earnings, but not in this cycle. They're the 11th of November. So these were just straight up line in the sand puts, and go figure, they're still open. There's about 5,500, almost 60, about 6,000 contracts open on that strike right now. So Mr. Rock Lobster, this guy came out here. He wrote his line on the 65 strike. He said, this far, no farther. And the stock said, okay, and turned right around and went in the other direction. So what do you think of this one, sir?
Well, clearly correct. He's probably a little bummed they didn't pick up the other $20 on the rally.
Yeah, that's the other side of that. Is that's the downside of line in the sand, listeners, is you don't get the stock pop.
If we probably went through historically and say, how many of the line in the sand puts were good trade? I would bet on balance it's like 80-20, winners to losers at least. Because whoever these guys are that put that, guys or girls, people, that put these things on are generally, they tend to be higher on the savvy scale. Maybe it's because when you sling a put like this, you have you have a pretty good idea how the underlying trades. But man, they almost damn pegged the bottom or the short-term bottom.
They pretty much did. So the opposite of the other guy's timing. The other guys bought puts at the bottom. This guy at least sold puts at pretty much the near-term bottom here. So well done for you, sir, even though perhaps you're regretting maybe you got some stock in your back pocket. We don't know. We're just looking at the options. And we're also going to look at your questions now with a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's get right into it. First up, we got Barrett Wade. Barrett Wade says, hey there. Well, hey back at you, Mr. Wade. He goes on to write, do you guys have a rule of thumb to keep from overpaying for an option? Oh, there are so many. They are legion. But I've been talking for a while, so let's rotate on our cast of crazies here. Uncle Mike, I'm sure you've got about probably 7 rules of thumb to keep from overpaying an option. You don't have to share all of them with Mr. Wade here, but let's give him 1 or 2, sir, for how to keep from spending too much.
Well, I think the main thing is my main rule of thumb is to do stuff. So, for example, let's say that I feel that an option is overpriced, but I just got to have it. I got to buy that call. I got to buy that put. Then I would turn it into a spread of some sort, whether it is working into a diagonal, doing a vertical, something along those lines. That's typically what it is. I don't necessarily have a rule for I want 1% of the underlying, or I don't want to pay any more than that based on the movement. I don't usually have that. But what I usually try and do is if I believe that I can make a certain amount of money from it, then I go more by the percentage of what I think I can make on it. So in other words, let's say that I'm looking to buy an option on like a really high priced stock like an Amazon or a Google or something like that. Then what I like to look at on there is what do I think the stock's going to move and how much money can I make off of the option? And let's say it is something like an Amazon or a Google or just something that's higher priced, then I think the important thing to do is cut the amount of contracts if you do want to buy a single leg, because those can get pretty expensive, to say the least, because of the fact that they're just such a large, highly priced underlying. And if it is too much for you, if you don't feel that you can make a lot on it, then I think the next step would be to look at what would your position delta be. How many deltas am I actually buying when I buy this option? And if it's way too many for you, if you buy an at-the-money call on pretty much any stock, then you're buying 50 deltas for whatever time frame you're actually getting. That's what you're paying the premium for. And if you feel that that's too much to pay for the 50 deltas, then I think you need to look into turning it into a spread, maybe buying an in-the-money option or something along those lines. So I don't have a specific rule of thumb per se. I have more of a dollar amount risk management type of approach with that, because you can always modify the amount of contracts that you can buy. And if you deem that the volatility is too high to buy a certain option, but you still like the underlying, then there's plenty of spreads available. And I've never run into the problem saying it's just the option's too high priced, I can't buy it. And then I just buy a spread instead of some sort. I've never not been able to do that in some way. So bottom line, the answer to this, in my opinion, as it is to so many other things in trading, is do what Andrew does. Do stuff.
Real quick, Uncle Mike, what did you think of that with that put roll we just talked about with the guy hitting the bid for 3 cents? Is that what Uncle Mike do or do not?
It would probably be a do not, but if I needed the 22 grand or whatever it was, then maybe it would be a do. I don't know, but most likely a do not.
Let the dice fly at that point, as they say. All right, Mr. Last Emperor, I'm sure you get questions like this quite a bit. Maybe who knows? Maybe Mr. Wade is a Fidelity client. I don't know, but what are your rules of thumb to keep from spending too much on their options, sir?
Yeah, absolutely. So, a couple of ways that I could think about it, I guess, if the customer is asking about. Echo everything that Uncle Mike mentioned. I mean, definitely good analysis there. I would also say that if you're looking on the board on the options chain and, you have a dollar amount in mind that you're looking to spend, make sure that you think the strategy through, because if you're looking at a 50 delta option and it's too rich for you for the size that you wanted to do and the amount of contracts, don't just go out and do, twice the amount or 3 times the amount of 25 deltas. It's going to be a completely different trade, from the perspective of your outlook and the way the trade is going to behave if, in fact, the stock moves. So think through the strategy. So definitely agree with Uncle Mike there. In addition to that, I would say, avoid using market orders, right? So make sure that so that perspective of options liquidity, making sure that you're not overpaying for something, going through the offer by a dramatic amount, or going through the bid. Make sure that you're utilizing limit orders. Here at Fidelity, we have a way for you to look underneath the hood of the depth of the market, right, at different exchanges, how many contracts are available. If you are a large size trader, make sure that you have that in mind. We have, of course, the block desk here at Fidelity as well that we could route orders to that would work it in the background for you. And if the spreads between the bids and offers are too wide on the specific underlying that you're trading, utilize the Black-Scholes to figure out what the theoretical price is for that option. That's always a good idea as well, to kind of figure out where you should be setting your limit price if the spread is too wide, in fact. So those would be the things that I would suggest, and you should be all right.
Mr. Rocklobster, anything to add here for Mr. Wade, sir?
Well, what I like to do is, because mostly I buy, so if I want to get long something, I'll sell puts or something like that just to get long, to kind of get my feet wet just for buying an equity. But if I want to buy options, I want them relative to some kind of realized vol or current vol. So, because the simple reason is, if you're spending too much relative to underlying vol, the option's not moving enough and it kind of decays more. So it kind of defeats the purpose of you buying a vol versus, unless you get that hard power move. But if the stock goes up enough in one day, it will run over any decay. So it doesn't matter. But I don't like starting with the fact that if I buy that call, it's going to be decaying faster than, the expected underlying movement is going to generate dollars for me. So I look at realized vol, like short-term realized vol. If it's a short-term idea you have, you want to buy some calls, what's the 10-day vol? If it's longer, what's the 30-day vol? And what's the stock been doing, and how easy is it for your call to actually do what you want? That's another thing. So, if you're buying calls that are outside the expected range, you got a lot of heavy lifting to do. I don't know if TOSAW would approve of that. The underlying's got to move big. So I like, options well in with the expected range for the whole time. I like relatively brisk realized vol, because the only reason to buy calls is because you think the stock is moving. So I like both those things. When you kind of take them together, it kind of gives you an idea whether buying options are worth it or not. So that's what I would say there. And then that does give you the opportunity, like TOSAW says, to do stuff. Because once you have a little bit of movement, you can write some calls or something like that against the underlying. So that makes it easier for you, right? You don't want to make, I guess the short answer is, you don't want to make it too hard for your call to work. You want the underlying to help do a lot of the work. And ultimately, the underlying's got to be moving to make it work. So I think something like in ROKU right now, just for example, it's relatively easy based on how ROKU's moving for calls or puts or something that you buy in there to kind of, ROKU's moving enough, it's easy to make money buying a call or a put just because the thing's moving so darn much. So I think that's a case where it would be relatively easy to get something done in there on the buy side. I don't like the idea of selling options in there for that very reason. So seeing if the stock moves a little bit is a good reason to buy options in the first place. Then again, all this gets thrown out the window if you're looking for, let's say, a 90-day or a 1-year option or something with a very long term. In that case, you just want relatively low vol overall. Just, you're spending money in the bottom 20 percentile for volatility, so you're not paying much for the option. And then you're just kind of holding it like a stock. And, and do the Rip Van Winkle. Don't think about it too much in between, because hopefully you set your risk control prior to entry, and you just watch the market move.
All right, well said. We got to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. It seems like the worm has maybe turned again. Market's getting a little bit more lift. Most of the major indices up close to 0.25%, except for the Dow. The Dow about 0.1%. Dow the laggard today. So maybe that little bit of a retracement. Maybe that's coming back the other way. We shall see. VIX, though, back over the 14 handle, almost 1410 VIX cash. So perhaps the worm turning out there. We shall see. Let's go back around the horn. Let's start with Uncle Mike again. Uncle Mike's already keeping an eye on for the rest of the week into the weekend.
Twitter 3000. We're still magnetically holding to that 3,000 level on the S&P, and we're continuing to do that at this point. We're closer to all-time highs, but it's going to be interesting to see if the market digesting the Fed announcement can actually move anything at all. And of course, as always, watching someone's Twitter account and wanting to see where that's going. So next week, it's going to be, we're kind of at a crossroads with the market, and that I think we're either going to go up or go down, but we'll see. We might stay at 3,000 a little bit longer. We'll see how strong the 3,000 magnet actually is.
Uncle Mike playing the Valfefe game, as are we all. Mr. Last Emperor, sir, what are you paying attention to for the rest of this week?
So definitely the S&P level, Uncle Mike, I agree with you. I mean, I'm looking at the past 5 closing prices basically on the S&P. It's, 30.09, 30.07, 29.97, 30.05, 30.06. So, it seems like we've had movement up and down intraday, but the closing prices are pretty much the same right now, trading at 30.13. So looking at that all-time high as the potential, I know that tomorrow is obviously a triple witch. Generally a lot of activity. Friendly reminder to everyone who's trading SPY options, by the way, this is a big deal. SPY is going ex-dividend tomorrow, probably going to be paying about $1.40. So if you're short options that are deep in the money, beware of potential early assignments in your accounts. If you are long options, be aware of the fact that the price of SPY gets marked down by the amount of the dividend. So as a long option holder, you don't get that dividend, so the option value gets marked down. So be aware of these things. Make sure that you're paying attention to what you're trading. Know it really well. The other stuff that I'm watching next week is the GDP numbers. I think that's going to maybe solidify our views on the economy of how well we've done, at least in the last quarter, and the jobless claims that are coming out. So those are the things that I'm watching. Pretty quiet from the earnings front, so nothing really there.
And Mr. Rock Lobster, take us home, sir. What are you watching for the rest of this week?
If we can make new lows and vol, that's really what I'm watching. Apparently nothing else seems to matter. A gajillion dollars in repo agreements doesn't matter. Or Iran bombing somebody around Saudi Arabia doesn't matter. Nothing matters. Microsoft can't do anything. We're just going to spend $40 billion or 4% of our market cap, and we're going to buy stock at the top. So $1 trillion deficit, nobody cares. Nobody cares about anything anymore. So I guess we just rally because the Fed will keep interest rates low forever and somehow monetize all this and all be great. So, why not? Let's see a 12 handle tomorrow for VIX just because we haven't seen that yet. Let's just add one more goofball thing to the mix. So that's what I'm looking for. If they really can take the vol down and the market could actually not give a crap about what's going to happen over the next week.
I like that. Nobody cares about anything anymore. That could be our title for the show. Nobody gives an F about anything that's going on out there. They don't care. Bomb away. Go ahead. Do what you like. Mr. Rock Lobster, since we're with you already, take us home, sir. What if folks, maybe they do give a certain word and they want to come check out what maybe they could be doing in the vol space as a result. Where should they go? What should they do?
You go to my vol, go to our homepage, my vol newsletter. You can buy it. People like it. Also, I'm doing a webinar next Thursday evening, 8 Eastern time, on using some of our spreadsheets and basically vol art pricing to ways to price butterflies. Mark did a really cool webinar last week, and I'm following it up next week with how to use some of our stuff to look for basically cool index trades, like, how to set up high risk, high reward, low risk setup. So check that, go to our homepage and you just click on the link and sign up, and on you go.
There you go. Go to the homepage, find the link, sign up, and on you go. Mr. Uncle Mike, if I go to stcharleswealth.com, what can I do over there that's interesting and cool and fun for me, sir?
You can look up my phone number and give me a call, and we'll have a euro and an option conversation. Come out to my office on Main Street, or give me a call. I'd love to talk with people on the subject of option trading. I'm a financial advisor that is not afraid of options. There's not a lot of me out there. Give me a call.
That should be on your business card. There's not a lot of me out there. By the way, does that hold for me too? If I call you up, can I get a euro too? Does that work for me too?
If you come out to St. Charles.
We'll see. It might be worth the trip. Those tasty, delicious Skippy's, Euros, and lemonade. Not going to eat and drink themselves. And last but not least, Mr. Last Emperor, when you're not eating tasty, delicious Euros, what should folks, if they want to reach out to you? I know you don't have any food deals, but perhaps Fidelity.com/options has something that may intrigue them there as well, sir.
Yeah, definitely. Fidelity.com/options. Open an account. There are no minimums. Obviously, if you do have an account at Fidelity already, give me a call directly. Ask for me by name. I'm the only Konstantin and I guess the last emperor at Fidelity. So be delighted to speak with you. We're not afraid of options conversations either. If you want to learn a little bit more and visit with us on camera, Fidelity.com/coaching is the place to go. So looking forward to seeing you out there.
There you go. Fidelity.com, easy for me to say, /options is the place to go. Give him a call. Ask for the Last Emperor. It's easy to find. He's the only one over there. And if you're not done quite yet, you're saying you want a little more, maybe you want to sink your teeth, maybe you do give a darn about what's going on out there in the crude space and all the vol or perhaps lack thereof. You want to parse it a little more, well, guess what? You're in luck. I got my old friend, soon to be the doctor of VIX. Now, he likes to talk a lot of vol and crude these days as well. He'll be joining me on TWIFO in about 25 minutes. So if you're listening live, stay tuned for that. Otherwise, we'll be back here tomorrow to talk volatility views. And then we do the whole thing again next week with more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at Fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.